The offer in compromise, otherwise known as the IRS tax settlement, is probably the most talked about thing in the world when it comes to resolving IRS tax debts. You've seen the advertisements on TV and radio and on the internet. They're sold as a miracle solution to settle IRS tax debts for pennies on the dollar. But is that really the way an offer in compromise works? Today, I'm going to go over the offer in compromise process with actual numbers from a real taxpayer. That's coming up right after the intro. What's up, you guys? Corey Hankerson here from Legacy Tax and Financial Planning, author of End the Tax Nightmare, Insider Secrets to Beat the IRS and Reduce Your Tax Debt. Before we dive into the offer and compromise process with some real live numbers, I want you to go ahead and, if you haven't already done so, please subscribe to our channel. If you haven't done that already, please do that. Also, go ahead and hit that like button and hit that notification bell so that YouTube knows that you like this type of content and they send you more of it. So, the offer and compromise. What is it? How does it work? And how do I qualify for an offer? So today I'm going to illustrate the offer and compromise by going through real numbers from a live case from an actual tax client, and go over their actual numbers to show you how the offer worked. And you can apply those numbers to your own situation to see if you qualify and whether an offer would work for you. Okay, so there are three different types of offer and compromise. We'll call them offers throughout the rest of the video here. The first is an offer based on doubt as to liability. That's where you're saying, there's some serious doubt as to whether you even owe the tax in the first place. The second is an offer based on effective tax administration. Those are very uncommon. Out of all three, there's probably the least common type of offer. But the third is actually the most common type of offer. That's an offer based on doubt as to collectability. Of all the three, the offer based on collectability is the most frequently submitted, and it's also the one that on a percentage basis, the IRS actually accepts the most. Okay, so we're going to assume that for purposes of this video, we're talking about an offer based on doubt as to collectability. Okay, and when you submit an offer based on doubt as to collectability, you are essentially saying, yeah, I owe the tax, right? I owe the tax. However, I can't afford to pay the tax in full before the expiration of before the tax expires and becomes uncollectible. And therefore, it's in the best interest of the government to accept this offer, this lesser amount that I'm offering to satisfy the tax debt in full. To understand the offer and compromise process, you first have to understand two concepts. The first is the reasonable collection potential, known as the RCP. The second one is the collection statute expiration date, CSED, also called the CSED, commonly called the CSED, okay? The RCP, or the reasonable collection potential, is the amount of money that the IRS could expect to collect from you before the tax debt expires, notwithstanding any offers to compromise the liability. In other words, it's the amount of money that the IRS could expect to get from you if they just garnish your wages, right? If they just go ahead and garnish your wages and seize your bank accounts and take all the assets, it's the amount of money that they could expect to get from you before the tax liability becomes uncollectible, before it expires. Now, the second concept, the CSED, has to do with the amount of time that the IRS has to collect that debt before it expires, which is typically 10 years from the date that the tax was assessed, okay? So 10 years from the date that the tax was assessed, it will generally expire, and that date is known as the CSED date. Okay, so keeping the RCP and the CSED in mind, we need to establish two things. The first is how much tax the taxpayer actually owed. In other words, what's the size of the debt? And secondly, when is the CSED date? In other words, when does this debt expire? So in our particular example, our client owed a total of $195,000. He had balances from 2012, 22,000, 2013, 119,000, and 2014, $54,000. The next thing we need to know is the CSED date, right? So when does the tax expires? In this case, the CSED is March the 5th of 2026. So as you can see, There are two moving parts to an offer and compromise calculation. The first is assets, and the second is income. More specifically, net equity in assets and monthly discretionary income. So, getting the IRS to agree to your calculation of income and assets is the entire ball game when it comes to an offer and compromise. Your offer lives or dies according to your ability to understand the tax code and the collections regulations to establish your income and assets are insufficient to pay the tax before the CSED date. All right. Now let's look at some. So let's start with the assets, and you'll see how we're able to reduce or exclude some assets to get the best deal possible for the taxpayer. Your assets are things like your car, your any vehicles that you own, any real estate that you may own, any retirement accounts, etc., and so forth. Right. So the net equity in those assets is the value of the assets minus any outstanding liabilities that may attach. Okay. So we're talking about the value of the car minus the car note, the value of the house minus the mortgage, the value of the retirement account minus any outstanding loan balances or any unvested portions of that particular account. That's what we mean when we're talking about net equity in assets, and that is what counts when you're submitting an offer. Okay, so in this case, our taxpayer has $10 in cash on hand. Now that's literally the cash in your wallet or your purse, right? I know it's kind of trivial, but it is required that we disclose that. A vehicle that's worth $32,500. The vehicle has a loan balance of $21,118 against it. $20,000 in a retirement plan, but he had previously taken out a loan in the amount of $9,500 against the account, and a home that's valued at $500,000 with a mortgage balance of $338,000. So once we apply the exemptions and calculate the relevant quick sale values, the net equity in assets in this particular case is $77,532, which must be included in the offer amount. Okay, next is income. Your income is obviously what you earn each month, but discretionary income is what you have left over at the end of the month after you've paid all of your expenses. And the only expenses that count are the expenses that are allowable according to the Internal Revenue Service's published collection guidelines. Okay. So in this case, our taxpayer has a monthly income of $7,500, which is a good, healthy income, but not really crazy in many metropolitan areas across the country. Okay. Our taxpayer does have one minor child, which they do claim as a dependent. So that means for tax purposes, collections purposes, they are a household of two. Okay, so in the particular county that they live in, a household of two is allowed is allowed expenses of $7,049 for a household of two. That leaves a discretionary income of $451 per month. Multiplied by 12, we get $5,412, which must be included in the offer and compromise. Okay, now remember, our offer and compromise formula is the discretionary income times 12 plus your net equity in assets, right? So in this case, we come up with an amount of just around $82,000. That's going to be the minimum amount that we're going to offer the IRS, and we would expect them to accept that amount based on the calculations. So that's a savings of over 58%. He's going to save over 58%, or $112,000. Even after you include the fee that the taxpayer would have paid to us to represent him, he's still saving well over $100,000 in taxes. Now, I know that $82,000 that he's going to have to pay is still a lot of money. And I know that you're used to seeing or hearing advertisements on TV where people are settling their tax debt for pennies on the dollar. But a deal like this is one that's more in line with what you're going to see when you have a taxpayer with a reasonable income, a healthy income, and some amount of savings in the form of retirement savings or even some home equity. So I wanted to do a more realistic picture of what an offer is going to look like for this type of taxpayer. Also keep in mind that the $82,000 that he has to offer, nearly $70,000 of that money is accounted for by the equity in his home and his retirement accounts. So if it weren't for those two things, the amount that he's going to offer is going to be much better. So in my next video, I'll review a slightly different situation and discuss how it is or why it is that right now might be the very best opportunity you have in a long time to resolve IRS tax debt. All right. So it should also be noted that while this taxpayer does qualify for an offer, I mean, technically he does qualify, he might decide that an offer in compromise is not the very best solution and select one of the other methods of resolving an IRS tax problem, which I will outline specifically in a future video and reference back to this particular scenario. Now, if you owe back taxes to the IRS or state, you don't have to fight it alone. I want to send you a copy of my top-selling book, End the Tax Nightmare: Insider Secrets to Beat the IRS and Reduce Your Tax Debt. You can buy the book on Amazon.com or on Barnes & Noble if you wanted to for $19.95. But for right now, I'm letting you download it absolutely free. While we still have supplies available for a limited time, you can download it absolutely free. Just go to endthetaxnightmare.com. Enter a valid email address and I'll send you a copy of the book. There's a link to the website where you can download the book in the description below. Inside, I'll show you how to stop IRS liens and levies, how to possibly settle your tax debt for less than you actually owe, and how to set up the payment plan that you want as opposed to the payment plan that they want. All right, so go ahead and grab a copy of the book. There's absolutely no cost or obligation to go ahead and get yourself a copy. And if you'd like me to review your case and help you to determine if you qualify for an offer in compromise, you can schedule an appointment by going to legacytfp.as.me. There's a link to the scheduling site below in the description below. You can go right down there and book yourself an appointment. All appointments are by phone, so we're social distancing. You can book your appointment for a time that's most convenient for you. All right. You can also give us a call at 1-877-LEVY-KING. That's our new phone number, 877-LEVY-KING. That's 1-877-538-9546. Again, that number is 1-877-LEVY-KING, like an IRS levy, 877-538-9546. All right, guys, I hope you like this video. If you haven't already done so, please like us on Facebook, follow us on Instagram, and subscribe to our channel. We do post content across all of the social platforms on a regular basis. All right, that's it for this week. Talk to you next time. Bye-bye.